Hello and welcome to the Banker's View from the IMF series. I'm Kimberly Long, Asia Editor at The Banker, and today I'm speaking with Chea Serey, Assistant Governor of the National Bank of Cambodia. Thanks for joining me today.
Thank you for having me.
So Cambodia has really led the way with the development of the backbone payment system Bakong. What was the motivation for the development of this system?
So first, when we work on this, when we started on this, the initial intention was to address the fragmentation in the market. So we have a lot of payment service provider in the industry. We also have banks who have their own mobile phone application, and none of those actually speak to each other. So everyone would operate in their own environment and not allowing their customer to send money across the different platform. And so what we were looking to do is how can we bring all of them together on the same platform? And so as we were ways to create this interoperability between player, we realized that the beauty actually of the distributed ledger and the peer-to-peer nature of this technology. So one way we could do that by bringing everyone onto the same platform is to go through the conventional way that we do this, which bring everyone to have a bank account with the central bank, and the central bank would then act as the clearing and settlement agent for these different institutions. Whenever there's a cross-institution payment, then the central banks would then, act on their behalf because we hold everyone accounts on our balance sheet, on our system. But for us to go through this conventional system, what it implies would be that the payment service provider, who are regulated as a mere, technology provider, would have to comply with the stringent level of liquidity management as we would normally impose on banks, right? Because they would have to settle on behalf of their customer. So they have to hold a certain liquidity with the central bank and then settle it. But that would then beat the purpose of then regulating as a simple technology provider, service provider in the first place, because what we wanted to do is to make sure that the compliant cost for these service provider is as little as possible, so we can provide cheaper service to the end users. And so by bringing them to the level of how we manage bank, then we would add on the compliant cost onto them, and ultimately this cost will pass on to the customer. And so with this peer-to-peer, what it allows us to do is to eliminate that intermediary level. So the central bank doesn't need to be the settlement agent for these different institutions. What they need to do is to integrate the system to our system, and their customer can only transact when they have money in their wallet. So basically, if they don't have money, they know that they can't transact. So the service provider, the payment service provider or banks don't have to worry that, oh, by the end of the day, do I have money to settle the customer transactions or not? So this is one issue that we want to address, the interoperability part. The other is financial inclusion, because when we look at the way our system operates, is that we have the more affluent customer who can afford to open a bank account, they will transact within the banking system. And then the lesser affluent, those in the provinces of the rural area, they would only have a wallet account, and they can only transact within those who have wallet account. Not even wallet account provided by a different service provider, but only wallet account provided by the same service provider. So you create this sort of divide between the rural area and the urban area, where the urban area, because they have a bank account, it is easier for them to transact across institutions, but for those who have wallets, they can't. So if, let's say, someone work in the city, a migrant worker has a bank account and want to transfer money back to the provinces, to their parents, their family, they wouldn't be able to do that, or they could, but they will have to pay higher costs. So it will go through different channels. So by bringing this, the system together, we're able to bring in this divide closer and to create a bridge between the urban and the rural. And also because the way we design our application is we make it simple in terms of the KYC. All you need is a phone number, and that will allow you to transact up to $500 equivalent. And then if you want to increase the amount you can transact, then you have to take a photo of your ID card and take a photo of your selfie, and then you can keep increasing it by, being at the ultimate sort of amount you have to be physically present at the banks, and the bank would do the KYC. And so because we create this tier KYC, it make it easier for people to open a wallet and transact in the in a digital form. And what is important, why it is important to have people going into the digital payment space is that because when you go into the digital payment space, you create digital footprint along the way. And so if somebody has not had a credit history before, the mere fact that you have a payment history would allow the banks to understand you better, right? And so the moment when you start asking for credit, then you have this past history of your payment behavior in already. And so you can use this toward your sort of payment history, or create sort of a history about yourself that banks and financial institutions can understand and have more sort of visibility about who you are and what you're doing. And the third is that we want to address with this Bakong is the use of local currency. The Cambodia economy is highly dollarized, US dollars circulating freely. 90% of our economy is in US dollar. And so what we want to do is to make sure that for those who want to transact in local currency, they can do so conveniently. So now we're a fairly cash-based economy, right? And because the exchange rate between US dollar and local currency, $1 is equal to about 4,000 real. So if you were to carry cash, you would have to carry a lot of banknotes. And that's very inconvenient. We did a survey as to the reason why people don't use the local currency, despite the fact that our foreign exchange has been very stable for 20 years. Inflation rate has been low, and our economic growth has been quite high, averaging at about 7% for the past decade, except obviously during this pandemic. And so people were saying that, well, it's very inconvenient to count the zeros. It's very inconvenient to carry cash. And so we thought if we can make it easy for people to transact in local currency, then they would use more local currency. So that's the main three sort of reason why we set out to introduce this platform.
And Bakong now is being used for cross-border transactions as well. So how else is Bakong being used, and what are the aims for the future?
So recently, about a month and about 2 months ago, we have launched this cross-border transaction between Bakong and a conventional banking, mobile banking platform from another bank in Malaysia. And the idea is to allow, again, migrant worker, Cambodian workers who work in Malaysia to be able to remit money back home efficiently, so easier and more affordable. Now, because we anticipate that Bakong, first, it is easily adopted by the people. As long as you have a smart mobile, you can download the app and register yourself at home. Also, because we foresee that Bakong allow the interoperability, meaning that even if you don't download the Bakong app, as long as you have another member bank's apps on your phone, you can transfer money to anyone else through the Bakong backbone system. So let's say if I am a migrant worker in say Malaysia and I want to send money home, the traditional or the usual way to do it now is One is you use a informal service sector. So somebody come home, you would just give cash to this person, and this person will bring the money back to your family. And then you will have to pay this person a lot of commissions. And it can also be dangerous because this person can just run away with your money. The other way is you go through the traditional SWIFT system, or the Western Unions, or all these traditional system. But then you will have to pay a certain fee, and your family member would have to travel to a bank branch to be able to cash out or to withdraw that money. Now, with the system that we're trying to introduce, what we foresee is that our migrant worker will have to have a bank account with this particular bank that we cooperate with. And through that mobile application, anywhere, anytime, they don't have to ask their employer to go out and make a money transfer. Anywhere, anytime, they can transfer money to family member using their phone number. Because if the family member has a Bakong account, they can receive money sent from Malaysia going to their wallet directly. And so this is very powerful for women, particularly when you send money home. What you want to make sure is that the money is used for the purpose it is supposed to, right? It is used for the children, school fees. It's used for the children, healthcare, or whatever that is important for the family. So by being able to transfer money directly to the intended user, we eliminate the risk of one of the family member misuse that fund. So a migrant workers in Malaysia can send money directly to the school or directly to the hospital without passing through any member of the family, if she chose to be so, right? As long as the service provider, as long as the hospital has a Bakong account, or even any other bank account that is a member of Bakong, then she's able to do that in a very efficient manner and cost effective. At the moment, to do so from Malaysia to Cambodia, one-time cost would be about 10 ringgit, which is about $2.5 US for any amount. So if she were to send 100 US dollars, that's 2.5% fee. It is still high, when your earning is small, but we hope that going forward, we can, with more sort of transaction going on, we will be able to reduce this cost on cross-border transaction.
Okay, thank you. And also, I suppose, like the COVID pandemic is still so prevalent and top of mind for so many people. How has the central bank supported local businesses throughout the crisis? How long will these measures remain in place for?
During this pandemic, a lot of things has been done, but it seems that there's always new things happening. So when we thought, we're there, that's it, we discovered the vaccine, then, there's a new variant coming up. But what we first did when at the very early on of the outbreak was to release the liquidity of the banking system. So we reduced the reserve requirement. We also relaxed some of the prudential measures on liquidity coverage ratio. We released some of the requirement, the stringent requirement that we imposed before the pandemic turned out to be very useful when the crisis come. And so we were able to relax all these measures and encourage banks to keep lending. And that's during this kind of situation, keep lending is probably one way of trying to manage that the economy is not coming at a complete stop. We also encourage financial institutions to provide some restructuring services to some of the loans. So if the borrowers are facing with difficulties directly linked to COVID-19 outbreak and And at this stage, we initially foresee certain sector. For instance, it initially will foresee the tourism sector because, no more tourists coming, nobody can fly in and out. But eventually, as this pandemic prolonged, then we see that actually every sector are affected. And so our initial requirement as to, only if they are directly affected by COVID-19, then you should restructure, now become whoever needs, you would have to give them some time, because now it's very difficult to identify if this is directly related to COVID-19 or it's a sort of spillover from this, and no one can exactly identify. And so what we say now is that everyone is now facing difficulties. So we encourage banks to look at some restructuring options for their customers. So by delaying the repayment, reconsider the term and conditions. And of course, as I mentioned earlier, we did it by allowing them releasing from the prudential requirement that we imposed on them, liquidity, so that they can keep doing this. So that's the one thing that that the central bank has been doing. The other was more sort of more tangible, where you can see is actually the management of our cash, right? Because everyone is scared with the physical contact, and as a cash-based economy, it is very difficult to avoid, receiving cash or payment in cash. And so what we did was to try to sterilize our banknote as often as we could. So whenever we receive banknotes back into the central bank, we will sterilize this before we giving it out. We also encourage people to use digital payment instead of cash, if possible. And this is where, being able to launch Bakong project in 2020 and had a pilot done in 2019 was very beneficial to us, because now we can encourage people to go and transact online quite confidently, because it's now interoperable and it's cheap to do so. If we look at the digital adoption here in Cambodia, just within end of 2019 to today, we see an increase of about 300%, 350% of transactions, online payment, right? And in terms of value, is about 250% increase within a period of a year and a half or so. So that's really a really big number for a small country like Cambodia.
And thank you so much for joining me today.
Thank you for having me.